Welcome to the Chaka Strategy Podcast.
Welcome to the Chaka Strategy Podcast with Chaka Patterson. Chaka is a legal career strategist, former public company general counsel, former Fortune 100 treasurer and head of investor relations, and former AmLaw 50 partner who helps lawyers turn their legal experience into business impact. I'm Lisa Mosbey, your host, and today we're talking about why great lawyers still get left out of the business decisions. Chaka, thank you so much for joining me today.
Thank you for having me. It's great to be here.
Chaka, to start, can you tell us a little bit about your background and what led you to focus on helping lawyers become more influential business leaders?
My career has spanned a wide variety of settings, and I feel like I have covered just about every seat at the business table. I have been corporate twice. I've been head of investor relations and treasurer at a Fortune 100 public company. I have been a public company general counsel. I have been a prosecutor in the government twice, and I have been a partner in 3 AmLaw 100 law firms. And so that has given me a broad perspective on how businesses make decisions and where lawyers can and should fit into those decisions. What I noticed throughout my career is that lawyers are actually left out of the decision-making and often left out of the decision-making room because we approach problems like legal problems rather than the business problems that they are. And so I decided to start Chaka Strategy to really help lawyers turn their legal experience, their legal expertise into business impact. Because one of the key things that people, I think, often underestimate is that the legal department touches just about every corner of a business. And given all those touches and given that ubiquity in the business, the legal department can be and should be a strategic asset, not a cost center.
And I'm curious, Chaka, you've witnessed this happening, but I want to know your opinion on why do you think it is that these capable lawyers are left out of important business decisions?
Yeah, I think it often happens because lawyers tend to approach business problems through solely a legal lens. So we come into a room full of business people, we lead with the legal issue, framed solely as a legal issue, and then we provide our legal advice in legal language. And so we're the only people who have that lens in the room. We're the only people who speak that language in the room. And so it can oftentimes appear as if we are creating friction, we're creating delay, we're creating more problems than solving them. And oftentimes it feels like the legal advice is detached from the business realities that the people assembled are trying to address. And so as a result, I think that's why business people try to go as long as they can without engaging legal.
It's a great observation. I've been in those rooms, and exactly what you're saying is happening in the business world. But what do business leaders expect from their lawyers that many lawyers don't realize they're looking for?
Yeah, so I think they expect 3 things. I think they expect context, clarity, and conviction. So first, with respect to context, I think business leaders expect their lawyers to understand the business itself, how it operates, how it makes money, what its pressures are, how it is situated in its industry, what are the tailwinds, what are the headwinds for the industry, how is the business positioned to take advantage of tailwinds or to gird itself against headwinds. Second, clarity. if you really understand the business and the context in which the business is operating, then they're expecting very clear direction that is directly tied to the business and how it is operating and situated within a particular industry. So what exactly do we need to do? How do we need to do it? Why do we need to do it? And it's all tied back to business objectives. And then third, conviction. Lawyers could often be like economists, right? We have two hands. So on the one hand, on the other hand. And I remember when I was a general counsel, that was incredibly frustrating. I remember one time we had a particular transaction. We were trying to close it in the very near term. I called the lawyer, our outside counsel, and the person literally would not give me an answer, right? It was either this hand or that hand. This could be, that could be. They would not give me a straight answer. And everybody else around the business table is not only required to give a straight answer, they're accountable for the answer that they gave. So when legal does the this hand or that hand, one, we're not giving a straight answer. And two, it looks like to the business people that we're trying to evade accountability for any answers that we do give.
Well said. I recently had a conversation with an attorney who was so educated in the medical field and he represented doctors. And I was surprised. I had to ask him, how is it that you know so much technically about the heart and about the way the body works? When you're representing people in these transactions, when you're their lawyer, you do have to have a technical expertise. I mean, maybe expertise might be too big of a word, but what's the difference between a trusted advisor and an attorney who's viewed as a technical expert to support their client?
Yeah. So a technical expert, as you described, is someone who really knows what they're talking about, right? They know this kind of law. They know this kind of matter. They're clearly the expert in their field. They give technically, legally correct answers. A trusted advisor, on the other hand, is someone who knows how to translate legal expertise into business impact. So a technically great lawyer knows how to redline a merger or acquisition document. And all the red lines are correct. These are all the things that, as a general matter, a business doesn't want to agree to, maybe not in their best interest. A trusted advisor knows what the business objective is and is able to advise the CEO and the board on the things that matter most in the transaction. So it's not about red lines. It's about getting the deal closed with the best opportunity to meet the long-term objectives of having done the transaction in the first place. So they are much less concerned about red lines and much more concerned about how does closing this transaction meet business objectives, even if we have to accept some provisions that we don't like. So, small example, when I was a general counsel, we were selling a business. We were selling it in Brazil. And my outside counsel wanted to hold up the transaction because the buyer, our outside counsel wanted to set the dispute resolution in New York federal court. The buyer, if anything went wrong, wanted to be able to sue us in Brazil. And so outside counsel's advice was, that's a deal killer. we cannot go forward with being subject to a lawsuit in Brazil. My point to the CEO and to the board was, number one, we're the seller. So we're gonna give them the business. They're gonna give us $1 billion. We're done. So we're never going to exercise that provision because it's a wire transaction, right? We're going to get same day funds. So we literally have the money, they have the business. There's almost no chance that we would ever need to sue them. So it makes no difference to us having the ability to avail ourselves of a New York court, number one. Number two, if they sue us in Brazil, okay, so be it. We've got great lawyers in Brazil. Many great U.S. law firms have offices in Brazil. There's going to be a lot of issues around getting jurisdiction over us in Brazil. So we certainly would not hold up a $1 billion transaction over a dispute, over where we would resolve disputes. And that's the difference between, our outside lawyers were technically correct. It'd be better if we could sue and be sued in the U.S., but a trusted advisor says that's not a hill to die on in a $1 billion transaction.
Right. I get it. I get it. So let me go here. You often talk about lawyers creating business value. How do business leaders define value differently from many other lawyers?
Yeah, so the big difference, and you see this tension all the time in legal. Legal tends to define value in one of two ways. Either in amount of work done, like literally volume of work. We have reviewed X number of contracts this year, which was 20% more than last year. Or they define value in terms of bad things avoided. Hey, we didn't get sued, or the regulators didn't investigate us. The problem with those two value metrics is they don't show up anywhere in the financial statements, number one. And number two, as a result, they don't match the KPIs, key performance indicators, that the business uses, that the board, the CEO, the CFO, et cetera, use, right? The business is focused on revenue. They're focused on margins. They're focused on earnings before interest, taxes, depreciation, amortization, EBITDA. They're focused on operating income and operating margin. They're focused on net income. They're focused on how do we take smart risks? How do we enter new markets? How do we grow the business? And none of the metrics that the legal department uses match the metrics that the business uses. And so as a result, the legal department is always off kilter because everyone else in the business is using business metrics. The legal department is using volume and bad things avoided. And so I think the way to resolve that tension is the legal department needs to move to business side metrics and needs to be able to talk about their successes in business language. So it's not we reviewed 20% more contracts this year than we did last year. It's we reviewed 20% more contracts this year than last year. As a result, we increased revenues by $10 million. And we reduced cycle time by 60 days, which generated 60 more days of cash flow of approximately $5 million. And we were able to reduce outside costs in hitting those metrics by $1 million. So now you've tied your activities to metrics that everyone else in the business cares about. Or, bad things avoided. This was a regulatory inquiry that went away. 3 of our competitors had a similar regulatory inquiry. They spent $30 million on outside counsel fees, and they were tagged by the government for $100 million. So we saved the business $130 million by having that regulatory fee, that regulatory issue go away. And that $130 million was used by the CFO, even if you just took like the hurdle rate, right, as the opportunity cost. You can calculate what the opportunity cost of that savings is and what the finance department did with the money that was not spent on the regulatory inquiry. And that's what makes the legal department become a strategic asset, not just viewed as a cost center.
And a trusted business partner. I followed you 100% on that language, and you are so right. The difference I understood, I tracked with you with KPIs and EBITDA. That's my world over there. And then when we get into the legal side of it, they just don't finish the sentence. It's like, we did this work and here's how it translated. And that's where they really connect with that business owner. I love it. This is just brilliant. This is a brilliant conversation, sir. For lawyers who want greater influence within their organizations, what should they start doing differently tomorrow or today?
Yeah. So to me, there's exactly 3 steps. Step 1 is you have to make sure that you and your legal department, if you're the GC, understand foundational business principles, finance and accounting, financial statement analysis, economics, risk and return, time value of money, and capital budgeting tools like return on investment, net present value, internal rate of return, things along those lines. Now a lot of lawyers, are scared of math, became lawyers because they don't like math. But, with AI, the one thing that AI does very well, and one of the things that I do when I teach this stuff to lawyers, is I give them the formulas, but then I also give them the AI prompts so that they don't even have to do the math once they understand the concepts. So it's just critical to understand the concepts. What do these things measure? And then you can use AI to actually do the math. So that's step 1, understand the business fundamentals. Step 2, apply those business fundamentals to your business. So if you're a public company, it's easy, right? You look at the 10Ks, you look at the proxy statement, you listen to the earnings call, and you can apply those foundational business tools to the business that you work in. Even if you're in a private company, certainly the general counsel can go to the CFO and get the basic income statement, cash flow statement, and balance sheet at a minimum. And typically most privately owned businesses have some sort of financial planning and analysis team who produce both short-term and long-term projections. Then the third step is then to connect, now that you know the foundations of business and business language, now that you actually know the business that you operate in, then the third and final piece is to connect your legal advice to business outcomes using business language, because everybody else in the business speaks, right? Business language is literally universal. Legalese is not. And so, like I always tell lawyers, it's like going to the doctor. When you go to your doctor and you have pain in your back, and the doctor starts talking to you about your body, your health in medical language, it's not a conversation because you don't speak that language. So if it's not a conversation, it can't be a partnership. And so it really becomes a lecture from the doctor to you about your body and your health. And we've all had that frustration with one time or another with a doctor. It's the same thing with lawyers. You walk into a room full of business people, you lead with the legal issue, you describe the legal issue in legalese. No one else in that room speaks that language. And so you have alienated everybody in the room because it's a lecture, right? Because they don't speak the language, so they can't, it's not a conversation. If it's not a conversation, it can't possibly be a partnership. So you've just literally converted it into a lecture. And, that's just, you're lecturing business people about their business in a language that they don't understand. And so that's never going to be a winning formula. And that's why so many people find the legal department incredibly frustrating to deal with. In fact, Thomson Reuters did a survey where they interviewed 2,300 general counsel. They then talked to their C-suite peers, and they just asked a simple question: does the legal department add significant value to the corporate objectives? 86% of the GCs interviewed said yes. Only 17% of the C-suite said yes. 42% said their legal department adds little to no value to achieving corporate objectives. That should keep every general counsel up at night. And that disconnect is largely around the fact that we don't know the business. We don't know business. We don't know the business that we operate in, and we don't connect our legal advice to business outcomes.
I will say it again, Chaka. This is brilliant. I have not come across this before myself, and I think that you're on the right track. And supporting so many of these law firms in getting it right is going to make a huge difference in how businesses move forward and create those partnerships and bringing on trusted advisors, not just technical analysts. Thank you so much for your time today and your insights.
Thank you.
That's it for today's episode of the Chaka Strategy Podcast with Chaka Patterson. If today's conversation resonated with you, go even deeper with Chaka's book, The Hot Seat: Mastering the Public Company General Counsel Role. Available now on Amazon, Barnes & Noble, and wherever fine books are sold. If you'd like to learn more about Chaka's workshop or legal teams, executive coaching, executive education courses, and other resources for legal professionals, visit chakastrategy.com. Thank you so much for listening. Be sure to like, leave a review, and subscribe to the show. We'll see you next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.